Okay, I'm doing this on Sunday, March 15th, right after one of the worst weeks on the stock market in a long, long time. I think Thursday was the biggest down day, down about 10%, and it was the worst day since 1987. And I actually sold a lot of stocks that day myself, and I went to 25% cash, roughly. And there's arguments for, why would you sell on that day? Don't you think that could have been a buying opportunity, etc. And I'm sticking with it, even though the market did go up on Friday about 10%. So clearly, with a little bit of hindsight, would have been better to sell on Friday. But I still think overall strategy of being in cash for the time being makes a lot of sense. And I want to say, I don't know that there's a right answer right now either, okay? So it's going to depend on who you are, what you're comfortable with, and a lot of things can work. In fact, being short and being long can both work. And I'll try and say why. So there are going to be a lot of people out there that are going to say, hey, this is a buying opportunity. Don't panic. You're panicking by selling. You should be buying and not selling. Warren Buffett's buying, he would buy in this stage, and et cetera, et cetera. And that can work as long as you're willing to be patient. And if things get a little bit worse, maybe are you gonna buy more, or are you just gonna sit tight? Like, what are you gonna do, and what are you willing? Are you okay with whatever downside that might still be there? So I'm going to argue that you should be doing it. You should be selling. You should actually have raising cash even when the market's going up, or just in general, maybe even just every day, take a little off, and then there'll be a time to get back in. Okay, so I want to say I don't think everyone's going to agree with me, and I'm not even necessarily saying this is the only way to do it. There's lots of ways to do things. But I'm going to make my case for how I'm playing it in my strategy over this short period of time. Another thing I want to point out is that I'm not a short-term investor. I do not play the market for fluctuations and getting in and on hot things and then getting out, or shorting and stuff like that. I just don't do it. I just don't. I buy good long-term plays, and you could make a case for this is a great opportunity. And I think that's true, but I just think we have an opportunity to get them at a little bit lower prices, or at the very least, from a risk management point of view, I think it's time to keep your cash. Keep it. And even maybe raise a little bit more. I'll show you what I mean. Okay. So here's my bullet points. Risk management. From just a pure risk management point of view, I think you just want to take some money off the table right now. Nobody knows what's going to happen. Of course, it could go up on Monday. It could go down on Monday. We don't know. That's why there's so much uncertainty. And, just a pure risk management point of view, taking some money off the table is a wise thing to do. So, I had a client once said to me, the best possible hedge you can do is go to cash. You can put on protective puts, and you can, maybe short some stocks, and you can do all sorts of fancy things, but sometimes the easiest and simplest hedge is to just go to cash. So that's what it is. I think there's a lot of risk still out there, and I'm in cash. Not 100%, by the way. I'm 75% long. So in fact, if the market goes up, I think it'll still do okay. Might not outperform the market. I love to have that powder dry for if things do get even better, even pricier, or better prices, let's say. Always nice to have in this kind of crazy market. I think one thing's for sure, it's going to be volatile. So no matter what happens on Monday, I could still get them lower than Thursday, potentially. Okay. So the next point, it kind of leads, I hope these things lead into each other. Err on the side of caution in type 1 and type 2 errors. Okay, so err on the side of caution, I think that just makes sense. It's certainly easier to go to cash, preserve what you have, preservation of capital, makes some sense, right? Type 1 and type 2 errors. anyone who's ever took a economics or math class might have run into these. So a type 1 error, and you should use the example in the textbook of a guilty man and an innocent man on trial. So if a guilty man is set free, I think that's a type 1 error. It does less harm than an innocent man being convicted. Okay, so that's more harmful depending on how I guess you look at it. But a type 1 error is a guilty man going free, because as long as he doesn't commit more crimes, I guess, like, who does it really harm? An innocent man being in jail hurts that innocent man to no end. If he convicted for a life sentence and he didn't do it, I mean, that's just terrible harm to that person. Okay, it's kind of similar to the stock market. If you don't buy a stock and it goes up, that's a type 1 error. It's disappointing. It's not the end of the world. Or you can buy a stock and it goes down, and that really sucks. So in that sense, I'm doing that too. I'm willing to take a type 1 error, meaning I'm not in the market at least 25%, and if the market goes up, oh well, I missed a bit of an upside, rather than getting all in the market, fully 100% vested, and it goes down. That just feels worse. It's a worse mistake in my opinion. So I'm willing to accept a type 1 error. So my question to the people who are thinking this is a buying opportunity: are you willing to accept a type 2 error of being wrong, putting all your money, all your chips on the table, and getting it wrong? And usually the downside is a bit more severe than the upside. Okay, you also probably have heard an escalator up and an elevator down, which just means they go down a lot harder and faster than they go up. So I know I got the next 10 years to buy stocks, or 5 years, whatever, even a whole year. I only got so much opportunity to protect my downside that is prevalent right now. Okay, my experience in 2008. I want to talk a little bit about that. There were certainly, I've been through this before, and 2008 was the housing crisis, and then the derivatives that they put on there, and then the whole banking system collapsed. Lots of things happened there. I think it was Bear Stearns was the first shoe to drop, and it was a bit of that's really weird. Bear Stearns didn't make it, and it market went down that day, and then kind of went back up, and just like, wow, that's really strange. That was a huge investment bank. Just literally people cleaned out their desks in less than a week. But we seemed to get over it, and then there was other signs, and I think Lehman Brothers really took a hit, and the market started to really crash big time, and that was October 2008. And everyone says, "Oh, see, October, it's a terrible month," just like October 1987 was a terrible month. So I remember being there and going like, what, it's hard to understand, especially when you're not in one of these, and you're just kind of, even though I'm in the market, I'm following it carefully. Like, it's not fully disclosed exactly what's going on behind the scenes at, how do I know what's going on with credit derivatives and, that kind of stuff. Like, I don't know. I'm sorry, I'm just watching my stocks, and if they are producing cash flow and they look good and all this stuff. The whole banking system was collapsing beneath our feet, and it seemed like, okay, this got to be a buying opportunity, right? It's just got to be. It just went down so much in October, and it wasn't. That wasn't the time. It wasn't the time. It wasn't till March of 2009 that it finally hit the bottom. That's a long period of time. Okay, which leads me into my next point, which is, let's compare this to other crashes. Okay, so I did that 2008 thing. I lived through it, and then I looked up some of the charts, and I said, oh yeah, there's probably some more downside here. So let's go to this other chart by another writer. And what was his name? Let's get his name right. Give him some credit. I just had it on the tip of my tongue. Okay, Sean Langlois, writing for MarketWatch. Okay, and he's got a nice chart here that talks about different crashes here. And let's bring that up. Okay, so this is MarketWatch, and he's using the crashes of 1929, 1987, and 2008 versus now. Okay, so each one of these lines are different ones, and you can kind of see there's a pretty general pattern there of, you know, big smackdown somewhere in here, but it wasn't necessarily the end, right? It kept going. You'd think that very big day would have been the day, and that was in different cases. I don't know which one's which here, but I don't think it really matters. Day 10 was this red one. I'm not sure which. Maybe I can figure that out. Red one was October 87. Okay, and then the pinkish one is October 2008. Okay, and then the dotted one I think is 1929. Yeah, so all the big crash around day 10, day 12. So we just had one not too long ago. And this must have been written on the Thursday because there was a bounce on Friday. The white one is, excuse me, is the current crash. So eerily similar. Still hasn't really. I think it bounced a little bit on Friday. And by the way, they're not all exactly the same, and I'm not suggesting that, you know, this has to play out. But when we got other crashes that are very similar, you got to kind of think. Also, by the way, I was around in the 2000 crash. Doesn't have it on here. Similar kind of pattern. Okay, you think, oh, I can't continue, right? It's got to be done, because that started actually in '99. Again, was not finished till much through, I don't know, March, April, I think it was, of 2000 before that really finished. Okay, so I just don't think we're there in terms of other crashes. Okay. As you can see, again, just recap there. The white is where we're at. You know, if you were going to just follow some kind of history, you know, we still got a long ways to go. Could be somewhere down in here if you just kind of took the averages of these other crashes. Okay, so that's another reason why I want to be in cash. And maybe I'm not even enough in cash, but, you know. Okay. The next thing. I think there's still more bad news to come. You know, usually for a turn, again, if I take back or look back to 2008, it just seemed like there was one bad news after another, and you know, once the bad news starts flowing, and you just can't find a bottom. Like, you just can't find a bottom, and we haven't had the catalyst to turn it around. Right, like we haven't had, like, the news is getting worse. Like, there's more people dying. You know, it's Armageddon out there. Did you go grocery shopping this weekend? By the way, it's like friggin' Armageddon. That is not a turn. You know, if I go out next week shopping and I see the stores are restocked, people are out and about. You know, maybe there's a turnaround there. Maybe that's a bit more bullish sign. Not sure. Governments have their head around this. We haven't got. You know, the testing, I'm going to talk a little bit more about those testing things coming up. So, I mean, I would say almost for certain the numbers are going to go up. I mean, they're just going to go up. We haven't been testing, so we don't even know who's got it, especially in the States. So, I just think there's more bad news. Again, I can't guarantee there's more bad news. You know, that's in the future. That's an unpredictable, or it's an uncertainty. It's not unpredictable per se, but it's uncertain. But it certainly seems as though more bad news is likely. I'd say that counts of like how many people have this thing are definitely going to go higher. That's almost guaranteed. Okay? All right, so the next thing is, and I touched on it already, I guess, a delay in the testing. So if we take a look at the U.S., They've only tested 15,000 people as of the last time I checked. I'm sure it's a little bit higher now, but that was when I kind of was doing the research. And South Korea, I don't have their number, but the comparison was if the U.S. had tested at the same rate as South Korea, they would have tested 1.5 million people by now instead of 15,000. That's off by 2 orders of magnitude. 15,000. What did they say? I meant 15,000 versus 1.5 million. Okay? 2 orders of magnitude behind the curve of where they should be compared to South Korea. It stuns me that South Korea is a leader over the U.S. This is the world we live in. Brings me to the Trump administration. I don't think it's a secret. I'm no fan of the Trump administration. I'm not trying to do political commentary, but I mean, he's a serial bungler. I mean, it's just true. I mean, he's bungled one thing after another. And I'm sure there's people out there that support him and they're watching this, and if they want to support him, go ahead. But at the very least, you gotta admit he's not been perfect. He's not perfect. Nobody is, I suppose. But he's absolutely never been in government, so he misses a lot of things. Let's just say he misses a lot of things that he should get. What are some of the things he did recently? I took a few notes here. Well, we talked about the no kits. Korea would have so many more people. I mean, he announces a national emergency, which was good. And then he's shaking all the people's hands. I mean, that's not a leader. You're not supposed to be shaking people's hands. That's one way the virus is transmitted. And during the speech of a national emergency, he shakes everybody's hand that comes up to speak at the microphone. And he's touching the microphone, and here's I work by myself. I can touch this. But he's adjusting it every single time. Hey, thanks for those words. And he's shaking people's hands. We're not supposed to shake people's hands. I mean, I think even the most uninformed people know that. And he didn't take responsibility for the kits being rolled out so slowly. I mean, you put Mike Pence in charge, who is not known for being an advocate of science. Let's just say that. I do not trust this administration to be leaders. Adam Silver was a bigger leader. Adam Silver, the NBA commissioner, who was definitely the first sports league in North America to say we're shutting it down. That's a leader. He said, I don't care about profits. I care about the people, and we got to shut this down. It's too risky. We're not going to take a chance. Meanwhile, Trump's on there saying, we're going to support the cruise line industry. The cruise line industry. Why is it so important to support the cruise line industry? Of course, people work in that industry. But you could support the people directly. You don't have to support the industry. If you're laid off because they're not doing cruises, well, you can give them unemployment insurance and just say it's automatic. I don't even want to discuss it. You get it. You don't have to go. We support the workers of the cruise line. We support the cruise line industry. There's also a bailout for Wall Street. Now, you'd think I would want a bailout for Wall Street because I'm analyzing stocks and I want stocks to go up. But it's just not what's needed. We need testing. We need to figure out a cure for this. We need quarantines. We need, that's what's going to move the market. Getting some good news. Not a bailout. Bailout, I mean, of course it'll help the market. But that probably just creates a bit more of a bubble anyways because it's just artificial. The real way to fix this is to, figure out a solution. So, anyways, there's my soapbox of why I think you should still be in cash, at least a portion. We're at 25. I'll say again, if you think it should be more, I get it. And it's probably fine as long as you're, if you take a 10 or 15% haircut from here, or even 20, and you're okay with that type 2 error, then by all means it's an opportunity. Because look, I fully expect to be sitting here 2 years from now and the market will be up. But I'm going to try and mitigate some risk while I can. I think I'll end right there. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.